Welcome to Supernatural Stocks on Moneyweb with your host, the Finance Ghost. This is your weekly fix of equity analysis designed for stock pickers. Whether local or international, you can expect a mix of news and my ideas about what I'm seeing in the markets. There really are two types of executives out there. The first type focuses on finding excellent reasons why it was impossible to do any better under the given circumstances. The second type refuses to accept that external factors will drive their fate, choosing instead to throw everything at trying to buck the trend. Here's the inconvenient truth. The second type can mostly be seen in founder-led companies, where a larger-than-life personality and talent has built something up from zero. Instead of simply winning a war of attrition all the way up to the boardroom, this type of executive has taken all the risks along the way and has managed to reap the rewards. Now, you can easily end up in a mad scientist situation that burns you, like I think we are seeing with Elon Musk. Those founders are of the get rich or go to jail variety, and I tend to avoid having exposure to them in my portfolio. You can also end up with founders who are surprisingly quiet out there, just getting on with it and growing their companies, and goodness knows these are unicorns that are worth hanging on to when you find them. Somewhere in the middle is more common, as these founders are usually quite well known and with good reason. I was told by someone quite recently that Brian Joffe used to have a sign that said, "We don't participate in recessions," at the Bidvest offices. Whilst a quick check online shows that this may well be true, I'm also conscious of how urban legends just get repeated over and over again. I would love someone from Bidvest, perhaps even Joffe himself, to confirm this story. Either way, I love the sentiment. It talks directly to refusing to accept that everything is out of your hands. Whilst nobody is silly enough to suggest that something like the platinum price, for example, is within the control of PGM miners, it's also unacceptable to consistently blame external factors that should really be part of the business risks that you, as the executives, need to mitigate over time. Yes, unfortunately, I'm looking at you, Woolworths. I'm genuinely worried that Woolworths could end up going the way of Pick n Pay. Sure, the feedback I see from shoppers on the clothing side is anecdotal, but people online do not seem thrilled with the quality and the in-store experience with the assortment. And the same anecdotal feedback would have saved investors a lot of money on Pick n Pay, as disgruntled shoppers were there long before the share price truly cracked. You'll do wonders for your retail research by just speaking to your peer group. Woolworths is facing a more competitive environment than ever before. They have to find a sweet spot of quality and price, getting back to what they were always known for. The last t-shirt I bought from Woolworths was not exactly cheap, and it lasted maybe 5 washes before getting those little bubbles that make it unpleasant to wear. Sure, it's one example, but guess who is not buying clothes there again? Yep, me. Now, the latest results show that it's definitely not just me. It's not just anecdotal stuff on social media. There's a problem here, with turnover up just 2.5% in the interim results and gross margin down by 170 basis points. Adjusted operating profit fell 17.7%. Those are objectively poor numbers, with weak sales growth combined with a pricing strategy that clearly just isn't working. At this point, you would hope to see a mea culpa of some kind from management. I would want to see a narrative around acknowledging the issues, taking responsibility for them, and promising the market a turnaround, particularly given what these executives are getting paid. Goodness knows that's what a founder-led firm would be doing. If strong founders don't even participate in recessions, then they definitely don't sit around in the bad times and blame external factors. Alas, with yet another disappointment in the apparel business, Woolworths thinks it is everyone else's fault. They talk about temporary setbacks in inventory flows due to the DC project, which impacted festive season trading. Look, I'm no supply chain expert, and I don't claim to be, but why is that project happening at the most wonderful time of the year? That sounds like bad planning. They also blame late supplier deliveries. At the end of 2023, they blamed the ports. Now it's suppliers. Again, I don't want to be that guy, but absolutely core to being a successful retailer is to put products on shelves. If suppliers are a problem, change them. If the ports are a risk, import earlier or source locally. Figure it out. Make a plan. Earn those gigantic payday bonanzas that are multiple, and I mean multiple times higher than what anyone at store level could ever dream of earning. If people at the till are expected to smile and wave after getting up really early to catch a taxi, then top earning executives should be expected to perform or move on. 2 years in a row, FBH at Woolworths has performed badly. 2 years in a row, Woolworths has tried to put the blame on external parties. It's disappointing for me personally, I'll be honest, because I had a lot of hope for the new management team after the disaster that was Ian Moyer. They are likable and they come with worlds of experience, so why is it going so wrong? Woolworths Food at least is performing well. The beauty segment within FBH is showing what is possible, so there's another bright spot. It is of course contributing to the decline in gross margin though, due to the mix effect of beauty doing much better than clothing. It reminds me of what an old tennis practice partner once said to me in my university days. Yes, he had moments of brilliance, but he had terrible quarters of an hour. And I'm afraid the moments of brilliance at Woolworths are not making up for the quarters of an hour. Meanwhile, in the economy class section of the plane over in Brackenfell, the juggernaut that is Shoprite continues to grow. They aren't running around buying businesses to plug gaps like Woolworths elected to do with Absolute Pets. Instead, they built pet shop science from scratch. They are delivering time after time, period after period, having built Checkers into something that gave Woolworths Food a serious fright. Clothing, outdoor, baby, Shoprite is coming, as these are the verticals that offer strong growth prospects. When you are South Africa's largest private sector employer, it is a very large and challenging base to grow off. But armed with huge data, not just big data, they are working to get a greater share of wallet among South African consumers, especially those with money to spend on more than just food. And yet, Shoprite is not founder-led. Pieter Engelbrecht was not there when the first stores opened. But here's the difference. He's been on the board of Shoprite Checkers since 2003. He worked in the project office, launching new brands within the group. He was appointed COO in 2005, which gave him exposure to managing costs and finding efficiencies. He was eventually made CEO in 2017, which means he's already been in that role for several years. Over the same time period, what has the Woolworths journey been? They had Ian Moyer, disastrous offshore acquisitions, and now a new CEO, not that new anymore, who was parachuted in from faraway lands. Unless things change very quickly, it honestly looks like they need an Engelbrecht. They need a CEO who has been with the group for many years and who has shown an ability to grow through both revenue and cost initiatives. Is there such a person at Woolworths? If there is, then they are not being let anywhere near the SENS announcements at the moment. I just cannot see an Engelbrecht-type leader blaming suppliers over the festive season for why one of the oldest retail businesses in the country is in the doldrums. I just can't understand how this Woolworths management team is putting numbers like this out there with these kind of explanations and not getting immense pushback from its institutional shareholders. Perhaps that is finally happening behind the scenes, in which case maybe, just maybe, things will start to get better. But I'm not holding my breath on that one. There's no such thing as an opportunity without risk, and these are merely my opinions on the stocks covered herein. Make sure that you do your own research, form your own views on the market when doing anything in your portfolio. Nothing in supernatural stocks should be taken as advice.